I'm Matt Bishar, and I'm at the La Quinta Resort and Club in Palm Springs for REITwise 2017, NAREIT's Law, Accounting, and Finance Conference. Joining me today is Scott Eisen, Head of North American Real Estate with Citi. Scott, thanks so much for joining us.
My pleasure.
Now here at REITwise, you moderated a panel on the state of the capital markets. How do you feel REITs are going to fare now that the Fed seems to have started to more regularly raise interest rates?
There is a view in real estate that as interest rates rise, that cap rates need to adjust accordingly. Because the equity capital markets are forward-looking markets, I think a lot of the expectation of rate increases have already been baked into the REIT stock prices that we see in the market today. And so as a result, I think as we think about where valuation is on a going forward basis, I think with most people thinking that the 10-year is going to be somewhere between 265 and 325, obviously a pretty wide range, but just the mere fact that there's an expectation of a meaningful increase in rates, I think has already had the impact on stock prices.
What sense do you have regarding whether the NAV discounts that most REITs now face are warranted, and if that's going to be changing either up or down as the year progresses?
Well, as you think about some of the major property sectors right now, we have the office REITs trading somewhere at a 10 to 15% discount. We have the apartment REITs in a 10% discount. We have shopping center REITs also at a 10 to 15, and then we have the mall REITs in a 25 to 30% discount. So obviously for some core real estate property sectors, those are some meaningful discounts. Again, as I said, the public market is a forward-looking market, and I think when you talk to most people, the public markets have been right more often than they've been wrong on where real estate pricing is going. And what we're seeing right now today is really a push-pull between the private markets, where there's still a very strong bid. You have offshore capital that continues to come in the United States looking for investments in real property, in particular in the major markets. We have private equity funds that continue to raise money. The top 10 private equity funds have about $100 billion that they've raised. I think if you looked at all the private equity funds I read in Real Estate Alert, I think there was $163 billion of unspent equity capital on the sidelines today. So really what we have right now is a push-pull in the market between private capital that's very well capitalized, foreign capital that continues to come to the United States, versus public market investors that seem to be taking a position and a view here that prices have to decline or NAVs have to decline. Either way, the expectation in the market is that prices could be going down from here.
And lastly, some policymakers believe that regulatory burdens are making it hard for companies to obtain debt financing. What are you seeing regarding the health of the real estate debt markets?
I don't know how that's really impacting the real estate markets. If you go through sort of the three ways we see people financing themselves, the first is balance sheet lending. Obviously, the change in administration and the outlook for financial services is very positive. And with potentially reform happening in Congress, I think a lot of the banks are continuing to lend money, continuing to grow REIT lines of credit, continuing to do balance sheet loans. So I don't expect any adverse impact there on the balance sheet lending. And I think the CMBS market is about as healthy as we've seen it in a very long time. You have the large loan and small loan conduit programs are very active today. I saw AAA spreads on CMBS is roughly 90 basis points, which is about as tight as it's been in a very long time. And I think we're seeing a lot of competition and demand from the large and small loan conduit lenders to really continue to do loans, continue to grow their securitization programs. So far, I've seen no real evidence of any regulatory impact on lending for commercial real estate.
Great. Scott, thank you so much for joining us.
It's my pleasure.
For more from REITwise 2017, be sure to visit NAREITsREIT.com.